Dominic Chu, platformer editor and CNBC contributor Casey Newton, and in her rapid-fire debut, CNBC reporter Christina Partsinevelos, which is just so much fun to say.
Yes, you said
assuming
it so
I got
well.
it right.
Yes.
Christina, welcome.
Thank you.
All right, first topic. This is a wild one today. Wolf Research downgrading Lordstown Motors to underperform and putting a $1 liquidation target on the shares, saying there's no way they can compete in the EV pickup space after Ford unveiled its electric F-150. Ford's Lightning base model is around $40,000. That's $12,000 less than the Lordstown Endurance pickup. And Wolf says Lordstown can't match Ford's price or reliability. And with no plan B in the pipeline, Dom, they say it would just be best for shareholders to sell out. The shares are down 13.5% today. They've lost half their value this year.
I mean, the competitive aspect is the thing that really gets you, because it took a while to play out, but you knew that there were going to be entrants in here, and you knew that the big automakers around the world, not just Ford, but everybody from Volkswagen to Toyota to Honda to every one of the U.S. automakers is getting in on the action here. The idea that you now have such a high-profile entrant in Ford, and, of course, President Biden making the trip out there to see the facilities, drive around in the vehicle, what it comes down to is whether or not there is a future for anybody outside the ones with massive balance sheets when it comes to this EV space. Now, Tesla's one we talk about all the time. The Cybertruck, I don't know. I'm still waiting to see when that thing comes out and how much of a following it will have. But the F-150 is the most popular pickup truck in America. The ICE one, the internal combustion engine one. You got to figure this is going to carry over in some way to the rest of the EV market for them.
Christina, I just love the fact that, you know, it's normally an analyst would say, given that I'm downgrading it to sell and lowering my price target, not I'm downgrading it and saying it has basically liquidation value. I mean, that was so shocking to me.
I know. Tell us how you really feel, going from $18 price target all the way to $1. So clearly he's enamored, like many others, with the F-150, the electric pickup truck. And we know even just the market cap, we talked about how it's a behemoth. That market cap is at $42 billion. This is a company that is just, well, the F-150s are just so popular with everyone. It is one of the largest consumer products out there after Apple iPhones. So we know that there's somebody, a dominant player in the market, but we can't just bash completely on Lordstown. So I'll just take the other side of the coin. There are some pros, no debt, and the fact that it's not beholden to all its suppliers. So I'm trying to find a few good snippets in that report, even though the stock is getting hammered.
Right. Maybe bring its value to $1.50. Casey, what would you add?
Just that I would like a Cybertruck. So Elon, if you're out there, send one my way.
So many fanboys. All right, moving along. The dean of valuation is making a bold call on crypto. NYU professor Aswath Damodaran telling CNBC that Ether has a better shot at becoming a real commodity than Bitcoin. He says the Ether is an engine that helps drive blockchain transactions, while Bitcoin is purely speculative and lacks an endgame. Both got crushed yesterday, Christina, but Ether is outpacing Bitcoin by about triple this year.
Well, do we really think it's a bold call? Because this is a conversation that's been going on for quite some time. And I only say this because I was at a party and we were talking about this, and somebody at the party just said, think of Ether like a giant foundation, a platform where you can keep building applications. You can keep providing smart contracts. It's going to be the center of decentralized finance, which means that you're going to bypass those banks, bypass those companies, and just deal directly through the technology. Bitcoin, on the other hand, doesn't offer that platform. So that's the major difference between the two. There's a lot of room for Ether or Ethereum to grow. And just in July, there's going to be a major revamp, too. So we could see some volatility coming, but it could make it a lot more scalable.
And Casey, I mean, there are drawbacks that people kind of say about Ethereum. Maybe it has like adverse network effects where it gets more expensive the bigger it grows. But, you know, when you read a little bit into that whole NFT phenomenon, that appears to ride the rails of Ethereum as well. So, yes, all of these are why people say, look, you can get Bitcoin and blockchain all in one. I guess that argument just works until it doesn't, right?
Look, I mean, there are a lot of smart people out there who are big believers in Ethereum. I saw a lot of people excitedly tweeting yesterday when the price crashed about how much that they were buying up. So it clearly has that core base of super fans. But at the end of the day, we're several years into it, and we still haven't seen a breakout hit come off of this platform. You know, at some time, I think Ethereum is going to have to put up or shut up here.
What about NFTs, Casey?
Well, so NFTs, I think, are something that is worth watching. I think there are a lot of folks who are going to get into the idea of these digital collectibles, and we have seen some successes there. I think the question, though, is just like, do you need Ethereum for that? Or just going to sort of invent their own coins?
Absolutely. Dom will give you a quick last word.
So I would say this. 3 years ago, I was at a CB Insights Future of FinTech conference doing a fireside chat with Joseph Lubin, who's the co-founder of Ethereum. And his whole notion was this is Web 3.0. This is all about decentralization. I would also say that it's about the utilization of it. It's a faster platform. So if you're looking for transaction-based kind of blockchain elements, this is the one. And that's the reason why maybe Bitcoin is perhaps falling a little bit more out of favor versus Ethereum in that chart that you just showed here today.
Dom, I hope you bought some Ethereum after talking to him.
I should have back then.
All right, from Web 3.0 to 1.0, Microsoft is pulling the plug on Internet Explorer after 25 years in service. Effective next June, it will shift focus by only supporting Microsoft Edge on Windows 10. Now, a change might have been necessary because take a look at this. After dominating web browsing in the 1990s, Explorer's market share has dwindled down to nothing. I mean, as of last month, it and Edge only had 4% of global market share compared to 64% for Chrome, Casey, and 19% for Safari.
Yeah, I mean, this is a platform that Microsoft owned and then really underinvested in. You know, Internet Explorer, maybe dying officially coming up soon, but I think it really died in 2008 when Google announced Chrome and just sort of immediately had a much faster, better browser on the market. So I think it will just sort of remain a mystery why Microsoft let this one get away from it so badly.
Wait a minute, didn't it die because they had like the biggest antitrust, of all time? I mean, this was like I mean, yes, they had kind of let it linger anyway, but I mean, it's a big deal when they start saying you can't package it with every operating system.
Precisely.
Yeah,
Go ahead.
I'm sorry, but yes, to that point, yes, you're right. That was a huge problem for them, but eventually they did make it through that case. They could have continued to invest in web browsing if they really wanted to.
Christina?
Oh, I was just going to say rest in peace. It hasn't been popular for the past 5 years. They cut support last year, and like you said, it killed Netscape. So now it's time for it to go.
It killed Netscape. Dom?
I would say this. I mean, how many of these platforms are actually used on? I mean, I can't remember the last time I really used a web browser. Here at work, maybe. But I'm always on my mobile phone.
What do you mean
I'm always on my iPad.
Browser?
Right. So it's either Safari or some kind of Chrome-related event for an Android device, right? Everybody's mobile these days. So, yes, these are still desktop-based, but I would say Safari and some kind of Google Chrome browser are the ones most people are using most of the time anyway.
Shepard Smith here. Thanks for watching CNBC on YouTube.